Yeah, the metals have been amazing, and it's you know, as I say, people go, "Well, what was the reason for that big, 35% sell off in silver? What triggered that?" And I go, "Did you look at what happened before that sell off? It was straight up and straight down, basically."
Yeah.
And I saw it coming, so I did call a 30% correction, basically, in silver. So I wasn't surprised by it, but it does when you get a 30% hit. Think about that. I mean, that oftentimes that's your full bear market, right? And in
Yeah, was it a
silver we
one
did
day?
it. In silver we did it in 1 or 2 days.
Yeah.
So it's easy to say that's a parabolic blow off, and we've reversed it, and now we're going down, and that's what I think a lot of analysts out there are saying. I see it as, and I saw it before the sell off, and I see it after the sell off. I see it as, yeah, you had this run up, very unusual run up, but very fast run up from um, basically $48 up to 122, but in the last month from 70 up to 122, and then you gave back almost all of the January run up in 2 days. And so I think this, the bottom on Monday, which was down under 75, probably is the low for this sell off and the low for the correction. Um, can you we got up over 90 today. Can you come back down and retest? I think you can. Some doesn't mean you'll go all the way back to 75, but you could come back um, and retest. Will we? I don't know. Maybe you can argue that intraday on Monday, I don't remember exactly where it went, below 75. Depending on what you look at, I guess, but somewhere 73, 4, 5 in there. And then it rallied and then came back and didn't go all the way back down. You could even argue that that was your retest, but I don't know. I mean, we'll have to see what the next couple of days bring. But I do think any retest is this week. I don't think it's something that's a month from now. Um, and so that means, you're down there. And frankly, so many people did not take advantage of what happened Monday and said, "Oh, this thing's going down. People are looking for 50, etc." And so I think there's a lot of people on the sidelines wishing for a pullback here, wishing for a retest or lower, that are going to be disappointed. So, and markets tend not to accommodate. So again, it's a little bit like the stock market. I wouldn't spend too much time worrying about whether 90 is going to turn into 80 or not, because I just raised my target. Again, I'll go back to kind of my October. I had a 75 target on silver. I raised it to um, I think 100, and then I raised it again. I'm losing track of my targets because I've been raising them so much, but
Yeah.
I raised it again to 125, and it got up to 122 in this most recent spike. Um, I took a look at it this week, and I said, over the weekend and this week, and I raised my target from 125 to 180, and I feel pretty good about that. There are people that think I'm still too low, but there's a lot of people think I'm crazy at 182. So at 180, so that's probably a good number. Um, but I mean, that's a huge. Think about it. Silver was $30 not
Yeah.
that long ago, and if it goes to 80, it's a six-fold run in a year's time or less. Um, so, but that's where I'm at on silver, and I think it is as you know, I'm looking for a global bust later. So all these things, stock market and the metals markets, we're talking about cycle highs. We're talking, I call them my pre-bust targets, but they're basically my cycle highs. Is it possible I will have to raise it again? It's always possible, but I think 180 is a pretty big run from here. Um, Gold, similar story, but not obviously as elevated. I raised my gold target from 3,400 to 4,000 sometime last year. Raised it again in January to 50. I think I had raised to 5,000 and again to 5,500 in January. Um, and I just raised that up to 6,800 um, for same time frame as silver here. So that's I mean, again, that's a big run for gold, which not that long ago was 3,000 or below, and now we're talking about almost 7,000. So um, I think we're in the sweet spot for these metals. As I say, it's not unlike the stock market, which I think the peaks there this cycle will stand for decades. Silver and gold will have another huge run post bust. So once we go through a global bust, come out the other side, maybe in 2027, later part of 2027, from there to maybe 2032 or three. Gold could go to 20,000 and silver 500. Those have been as you know, those have been long term, long held targets for me. I've had them for probably 5 years. Um, I'm thinking now, after we're seeing what we're seeing now, the odds are that those, at the time, they seemed absurd. I had a lot of people thinking that's crazy. Um, I'm beginning to think those are way too conservative,
Yeah.
particularly for silver. So,
Yeah, oh
but
yeah.
they won't seem as absurd or as conservative um, if we go through the bus. Because silver, let's say I'm right about 180, or just to round it off, let's say 200. In the bust, you could get silver back to $50, because it's so cyclical. So you know, I'm not about to raise my long term targets till we get through the bust and see what we're doing. But I'm just saying, if it can get anywhere near 200 this cycle, I'm not sure 500 is anywhere near close to where it's going. If we get the kind of cycle I think will follow the bust.
Exactly. So it sounds like, I mean, you're very bullish, of course, in the short term, pre-bust, and then post-bust, it's a little harder to tell, of course, but sounds like you see like a commodity super cycle and kind of inflationary driven cycle after that. But yeah, kind of pre-bust, maybe we could talk a little bit about Fed policy coming up because, of course, in the last week, Trump just mentioned that he'll probably appoint Kevin Warsh to replace Jerome Powell coming up. And so that could be another, I guess, bullish factor going forward as well, is perhaps investors beginning to see maybe the Fed will be a little more accommodative or, however you want to put it, dovish. Um, but it is just like one vote out of 12 total people. So, yeah, how much do you think that will factor in at all to the melt up kind of story?
Yeah, it's funny. I have a different take than what you hear a lot out there on the street. For whatever reason, people, and I think some of it has to do with Trump. Is the TDS or whatever you want to, the negative view of Trump. So no matter what, the media spins everything negative when it comes out. So Kevin Warsh, who I thought was a great pick. I mean, he's kind of the right guy to be chairman of the Fed. He's got the experience. He's been on the Fed before. I like him because he basically has a monetarist background. Um, but when he was chosen, and of course, I think any of the ones they had in his final list would have been okay. I wasn't worried about that pick. I didn't think it was consequential, like everybody was sitting on it waiting for it. But I wasn't, but I think he was my first choice, and it was a good pick. But the street narrative out there is that he is a hawk, and that what's Trump doing? He's going to have same problems he had with Powell. He's going to have with Warsh, or
Yeah.
he doesn't know what he's doing. Warsh is going to pull a fast one here and get in there, and then Trump's not going to be happy. No, that's not it at all. Warsh. Warsh is a monetarist, and rightfully so. Looks at the fact that our balance sheet has expanded from 800. The Fed's balance sheet has expanded from 875 billion in October of 2008 to where it got up to 9 trillion in post right in the pandemic. Um, and so now it's been brought back to 6.5 trillion. Powell's done that, and did it without crashing the economy, and without rates going through the roof. So I give Powell pretty good kudos for that. But Warsh, rightfully so, says the balance sheets, we're inflating assets and everything else with all the money printing we've done over the years. Not recently, obviously. If it shrunk from 9 to 6.5, that's not new money. We're not pumping new money in there, but in the pandemic we put 5 trillion in. So he wants to bring it back down. And so the street, I get what they're worried about. They think that that's that's tightening. That's going to be a problem. That's going to drive rates up. The thing is, Warsh is not putting a time frame on it and saying I want to do that immediately. So he may do it gradually. He may do a little bit of it. My take is basically I'm not even worried about that because the bust is going to dictate what the Fed does. I don't care whether it was Warsh or Powell or anybody else. When we get into a free falling financial system, that balance sheet's going to be expanded greatly. Now, none of our policymakers have that on their radar, none of them. And so they're not sitting there thinking about that and saying, what do we have to do? They're looking at it and assuming will it be in a stable economy, period, and that we can gradually bring, or at least Warshes, that we can gradually bring the balance sheet down. So I'm not really worried about what he thinks. And the other part that does fit with Trump and why I think he chose him, number one, he's looking to reform the Fed and get them away from this focus on quarter to quarter economy or month to month data, and trying to fine tune the economy on every data point. He wants to get it back to what it years ago. It wasn't like that. It was much more bigger picture, kind of how I approach the economy, how I approach my forecasting. And so I think that's good. He's also, I think, and in fact, after he was named, he did some interviews, and you heard him say this exactly. He goes, I think the Fed's too caught up in this idea that if you get growth, it's going to push inflation up. And he said, I think, given what we're seeing in productivity, given AI and deregulation, et cetera, you can have growth without inflation, and that the Fed's been doing a disservice in terms of keeping rates too high because they're wrongly worried about inflation because of the economy. So every time the economy gets some growth, they stop, they hike rates or they stop decreasing rates. And he said, we have, as Trump has said, we have the highest rates or some of the highest rates in the world. And yet we're the most productive economy, and our inflation's some of the lowest. And it's like, what are we doing? So that's where I think Trump and Warsh saw eye to eye. I think Trump rightfully saw Warsh as the right man for the job, not so much focused on what's he going to do next month or in the meetings, but really understanding that this is a guy that knows monetary economics, knows monetary policy, and knows the Fed, and wants to reform it. And so I view it as a very big positive, not a negative.